What's going on, you guys? So welcome back to my monthly update here on my top 5 stock picks for 2018, and boy do we have an exciting video in store. The markets have been quite volatile, and we have actually turned negative for the year at this point in time. So as of right now, the Dow Jones Industrial Average is down about 5.4% for 2018, and the S&P 500 is down about 4%. But before we get into the video, I just want to announce the winner of my weekly giveaway for a membership to Stock Radar. That's my weekly stock analysis membership site. As of right now, it is closed, and so the only way you can get in is to win your way in, and every week here on Mondays, I give away a free membership. This week, the winner is Fixed Mindset. They added me on Snapchat, and there are 5 different ways you can enter this giveaway. All of them are outlined in the description below. Fixed Mindset was the winner this week, and I already sent you a message over on Snapchat, so you're going to be getting a free lifetime membership to Stock Radar. Thanks so much for entering this giveaway. But anyways, as always, let's start by looking at the performance of our stock portfolio. And in case you guys don't remember, we picked 5 stocks back in December of 2017 that I thought would be the top performing stocks in my opinion for 2018. And we've been tracking the progress with a dummy portfolio with about $10,000 invested in each stock. So as of right now, our portfolio is in the negative by 0.21%. And on Friday, we had a terrible day with this portfolio. It was down 2.62% with a loss of $1,350.05 on our roughly $50,000 investment across all of these stocks. So as of right now, as you can see, we had a huge loss with Applied Materials. Applied Materials fell 6.07% on Friday. Amazon took a big loss as well. They fell 3.19%. Chesapeake had a loss of 1.29%. GE fell again, a 2.1% loss on Friday. And Boeing was actually positive slightly at a 0.43%. But as far as the performance of these stocks goes, since they've been added to this portfolio, we can see that we have had a 6.73% gain with Applied Materials. Now we're up 27% with Amazon still and just under 9% on Boeing. And then our big losers here are Chesapeake and GE. GE continues to fall. They just keep on falling at this point. It is still a falling knife, and it's one that a lot of investors are weary of catching just because it keeps on falling. I was very surprised to see that stock fall below $14, but now it looks like it could be heading to as low as $12 a share at this point. Really, it just keeps on falling, and it's unbelievable to me how cheap this stock really has gotten in terms of the PE ratio, the forward PE, and just the market capitalization in relation to the revenue they did in 2017. But investors are just not confident about this stock, and it just continues to fall. So GE has been the biggest loser of this portfolio, down 25%, and Chesapeake is down just over 20%. Now do keep in mind, when we added these stocks here to my portfolio, I said that Chesapeake was a speculative investment because they are a company that is doing very poor financially right now. And so it's a speculative investment, meaning it's high risk, high potential reward, but also a high potential for loss. And again, with GE, that is still a bit of a speculation. And right here is a perfect example of what can happen when you speculate and you're wrong about your speculation. So I'm actually glad that I included these stocks in this portfolio, because I'm glad we have a couple of winners and a couple of losers here, because if all of the stocks I had picked were going off like lightning, then I know I would have people out there just duplicating what I'm doing, and I never want people to do that. I want you to make your own decisions about what you're investing in. So it's good that there are a couple of losers here, just because this is a more authentic experience of what it can be like when you're speculating and making investments. Now, despite the fact that we are actually down 0.21% on this portfolio, we are still actually outperforming the market, because as we said, the Dow Jones Industrial Average is down about 5.4% and the S&P 500 is down about 4%. So even though we have massive losses here with Chesapeake and GE, we are actually still outperforming the market slightly with this portfolio. And if you negated GE and Chesapeake, then we're still doing pretty well with our 3 picks here with Applied Materials, Amazon, and Boeing. But as you can see here, it's been a very shaky year, especially for the Dow Jones Industrial Average. We had that sell-off that took place back in February, and we are now at a price below that sell-off here as of Friday of March 23rd. And then pretty much the same thing here we are seeing with the S&P 500. We had that sell-off that took place. They recovered a little bit, and now we're back down. We're not as low as we were back in February, but we did see another major sell-off take place with the S&P 500. So there wasn't a lot of major news here to talk about with these companies. There were a couple of things that I came across that I wanted to share with you. And first of all, this is this article here from CNBC talking about this potential trade war here with Trump and China. And again, all of these articles are linked up in the description below if you guys want to check this out. But Trump's big tariff blow on China may cause a backlash against Boeing. This was a big reason why we saw a sell-off taking place with Boeing stock this week. So President Donald Trump has announced tariffs on China on Thursday to curb theft of U.S. technology, and he could potentially impose a $60 billion tariff on Chinese goods. So while that may sound like a good idea on paper to some, this would be very bad for Boeing because the biggest U.S. export to China is aircrafts and airplanes, and one of the biggest producers of airplanes is Boeing. So China could potentially do the same thing to the U.S. here by going after Boeing and imposing tariffs and taxes on foreign aircrafts if they wanted to do the same thing. So right now there's fears of a trade war between the U.S. and China if Trump goes through with this and imposes that tariff, and that was a big reason why we saw a sell-off taking place with Boeing stock. So Boeing is a company that has global market exposure. They have customers all over the world, and China is one of their largest customers. We actually just did a 30-minute or so analysis on Boeing stock over in Stock Radar. So those of you that are members of that group, you can make sure you check out that. There's a lot of good information in there talking about Boeing. But as a result, they're affected by things like this, where if there are issues between the U.S. and China, as far as this trade war potentially, or as far as us imposing tariffs on them and then doing the same thing to us, then Boeing could really potentially get caught in the middle here because, as you can see, Boeing announced that China will be buying about $1 trillion of aircraft over the next 20 years. So if they were imposing any tariffs or taxes on that, that could significantly impact Boeing in terms of their revenue and earnings. And just to show you how big the Chinese market is for Boeing, it says here that 1 out of every 4 jetliners rolling off their assembly lines are being bought up by Chinese customers. So this is a huge market for Boeing. About 25% of their airplanes are being purchased by Chinese customers. So if something happened to this business and it became more expensive for them due to tariffs or taxes or whatnot, this could be very bad for Boeing. So that was, again, a big reason why we saw a sell-off taking place here with Boeing stock. And then we have this piece of news here from Amazon, the world's most disruptive company, talking about their new competitive video gaming service. So it's clear now that Amazon has plans to get into the video gaming market, a rapidly expanding segment. And at this point, it's like, why not? Why wouldn't Amazon be getting involved with this space? But Amazon is releasing a new service called Game On. This is a service that is going to allow developers and gamers to integrate and create competitions natively across mobile devices, PCs, and gaming consoles. So it says here that the basic idea of this service is that millions of people play video games and want to experience high-level competition with real monetary benefits on the line, but not all of them are at a level of professional gamers. From what I can gather here, it's going to be some kind of competition service where gamers can compete for some kind of monetary prizes. So I can't imagine this will be a huge business for Amazon, but it's very interesting to see the different businesses they are spinning off into. But anyways, guys, that's going to wrap up this update here on my top 5 picks for 2018. Obviously, this has not been a very good month for the stock market, particularly over the last week or so. It will be interesting to see where we are at next month, so make sure you guys stay tuned, and we'll check this again around this time in April and see where these stocks are at. Do keep in mind if you want to enter my weekly giveaway for Stock Radar, all the details are in the description below. And if not, thank you guys so much for watching this video, and I will see you in the next one. If you are interested in learning more about investing in the stock market, I've created a free course just for you. The link is in the description below. Here are a few other videos you might enjoy as well.